Hi, this is Larry McMillan with the stock market update on Monday, August 8th. So the market is still banging up against resistance at 4170. A breakout above there should be quite positive and you would indicate a move up towards 4300, a little bit higher perhaps. And that's where the bear market trend line is, downtrend line, and also the 200-day moving average of SPX. So that would offer some resistance. A move above there would be a complete game changer back to a bull market. I'm not sure that's going to happen, but we'll see. We're not going to try to guess these things in advance. As far as the SPX chart goes, if it were to fall below 4070, then that would be negative, and that would bring into play some downside targets. But right now the market's trying to break out on the upside, and we'll see if it can do that. A potential a modified Bollinger Band sell signal is is setting up. We call it the classic signal, and today S&P would have to close below 4138 for that to happen. But it changes each day as we go along. Even if we get that sell signal, we won't act on it immediately. We would want further confirmation to create what we call a McMillan volatility band sell signal. But so far, neither one has occurred as the S&P index continues to stay above the +3 standard deviation modified Bollinger Band. Equity-only put-call ratios are strongly on buy signals. They continue to fall, and as long as that's happening, that's bullish for the stock market. And breadth has been generally good. On Friday, even though the market was down slightly, stocks-only breadth was positive. New York breadth was not. But the breadth oscillators are on buy signals, and they're in overbought territory, which is a positive thing in the first stages of a new breakout move, which is sort of what we're still in. We're really, the bottom was so far made in mid-June, so we're not that far from that time frame. Anyway, so those two indicators are positive. The only remaining really negative indicator is new highs versus new lows. New highs on the New York Stock Exchange and elsewhere have really not been forthcoming. So that's just indicative of how far these stocks have fallen in the first 6 months of this year. And most of them are not able to get back to new highs yet. So that indicator remains negative. But we do have a very strong new positive indicator, and that's the trend of VIX. Both VIX and its 20-day moving average have crossed below the 200-day moving average, and that's a positive sign for stocks. So that indicator is bullish, and we've taken some positions based on that. So the one remaining thing we look at is the constructive volatility derivatives, and that's also modestly bullish for stocks. Overall, then, we have mostly short-term buy signals. The one negative is the new highs versus new lows, and of course the resistance on the S&P chart. But for the short term, we have been trading these buy signals, and they've been working out pretty well. So I invite you to visit our website, take a look at our daily letters where we follow these things, daily, and we can keep you up to date on them from, in a much shorter time frame. Meanwhile, have a great week trading.